So welcome back to the Do More podcast. I'm talking to Michael Every, who is in charge of global strategy at Rabobank, and we are today talking to him out of his office in Thailand. Now, Michael, the work that you do at Rabobank helps advise companies and individuals in terms of which way the business and geopolitics and economies are going. So if you can, let's start with your report on the Donald Trump administration, I think issued about a couple of months ago. And in it, you take a quite interesting point of view on the Trump administration. And as you know, in this part of the world, the Trump administration and Trump himself is somewhat disliked and even mistrusted. But you argue that there is a method to the apparent madness. What do you mean by that?
Well, thank you for the question and thank you for the invitation. The report actually was published the day that Trump was re-elected, so just over a year ago. And what I tried to make clear was whether you like Trump or not, which is a completely separate issue, and whether you agree with what he's doing or not, which is another completely separate issue, the way that his actions are popularly discussed or described in both financial and ordinary media are wildly inaccurate to the underlying mission statement. Because Trump is not just an agent of chaos, even though there is a chaotic element to what he is doing. He has a deliberate strategy, a grand macro strategy, as I call it, which is, in fundamental terms, to shift away from economic policy, which is a technocratic function, which we are more or less familiar with in terms of fiscal policy, monetary policy, FX policy, trade policy, etc., towards an all-encompassing, conflated economic statecraft. And when you bring in economic statecraft, everything has to join up. It changes the rules of the game almost completely. And you have to understand what the person using economic statecraft is trying to achieve, rather than just saying, I don't like these changes. And it's always driven by national security. And in Trump's case, it's an attempt to remake the US economy and the global economy in tandem such that the US's hegemonic position is maintained, but in a very different form to how we have seen it over the last 4.5 decades.
What are the key differences between what we know from the past few decades as the status quo, and what are the new building blocks of this new strategy?
Well, it depends where you're asking that question from, but in the most fundamental terms, we have had a security envelope globally provided by the US. That's obviously being withdrawn or shifting and changing. At the very least, people are being expected to pay much more towards their own defense if they want to have the American umbrella above them. That's one big change. In other areas, you'd say that, perhaps the umbrella's got holes in it. In another, we have had an economic system in tandem, which has been very, very markets focused. I make the quip because markets, in terms of understanding what's driving most outcomes in most places. And I say that sarcastically because I don't think it's always the best way to do things. And we have had a focus, a monofocus, if you will, on the US as the consumer of last resort. So everyone internationally could take part in this globalized, relatively free trade economy at different stages of the value chain in different industries. But at the end of the day, the US was over-consuming and borrowing from the rest of the world in order to do it, to keep the entire thing propped up. And that over-consumption on the US part has deindustrialized it. Unfortunately, it's weakened its military industrial complex significantly to the point where, yes, the security umbrella itself is even starting to crumble. So all of the central foci that we used to have, that we took as normal, one by one, have already crumbled or will crumble onto each other going forward. And we will have to construct an entirely new architecture, some of which will look similar, and some of which will look very, very different. And if you understand what it will look like in its totality, and we're all guessing, but I think my guess is perhaps more accurate than others, it can imply substantial changes in terms of how we have been used to doing things.
So from the Trump administration's priority list, what are the top 3 things it wants to address? And how far do you think he's come in this past 11 months in terms of achieving that?
Obviously, we've had a recent spat between the US and China over rare earths, and I don't think I have to go into detail about that because Malaysia has been dragged into that directly. That's obviously a US priority. But as I was saying earlier, in economic statecraft, everything is conflated together. Every aspect of the economy and politics and the military all start coming together. So from the Trump perspective, you've seen radical attempts to remake fiscal policy in terms of not just the one big beautiful bill, which is rather traditional, but Doge as well. You've seen changes to immigration policy. You've seen changes at the Pentagon. You're seeing changes in foreign policy. You're seeing changes potentially at the Federal Reserve, which will of course be extremely significant. You're seeing, the potential removal of the Department of Education. You are seeing, you name it, you are seeing it. The industrial policy, you're seeing the government take 10% stakes in certain companies. Tariffs, of course, a hugely important change for the US. And all of these things are necessary because once you remove the rather artificial ideological construct that everything should be done by markets as much as possible, at which point, what are you doing? The answer should be as little as possible. Once you remove that assumption and say, well, we have a target that we want to be trying to do X, not Y, you have to use every tool you have joined up to move yourself in the direction of Y and away from X. And so we've even seen now health insurers being dragged into it. We've even seen the housing market now being dragged into it. And none of this is a surprise because, for example, if you want people to buy made in America goods, they're more expensive. In the short term, ultimately they may be cheaper, but in the short term, they're more expensive. So you need to give people more money. How can you do that? You have to make mortgages cheaper. How do you do that? You have to have lower interest rates. And you have to make housing cheaper. How do you do that? You have to restructure the housing sector. You have to, reduce immigration to push salaries up. There are all manner of different conflating policies which are necessary to carry out in tandem. So you can't really say three because they all need to be done. But clearly tariffs is one that's happening. Rare earths and supply chains is another. And I think very much underplayed is what's happening in the financial system, first of all with the Fed, and secondly with stablecoins.
You also talk about in your report that although the endpoint seems to be quite clear in terms of his statecraft strategy, the way he gets there is quite chaotic, but that's the Trump methodology. I think that's what confuses a lot of people. And I think it's also quite deliberate on his part to keep people on their toes. But what is the grand strategy, Michael? What is he trying to achieve at the end of the day?
Well, if you bring it down to its simplest terms, it's to, as I said, maintain the US's leading position, but to do that by remaking itself and the global architecture, because the US had the leading position, but it had it within a structure which was not good for it. So, for example, many people believe the US gets a free lunch from the exorbitant privilege of the US dollar, and that's true, except for the fact that the free lunch is junk food, and it can only have junk food and nothing else. And if you have that day in, day out for 40 years, it doesn't do you a lot of good health-wise. So the US economic health and even political health is a shadow of what it formerly was. So they now need to make sure their diet is changed and they're exercising and taking protein shakes. But the rest of the world is trying to insist that the US only eats junk food because the rest of the world makes its money selling the US junk food. And I don't mean that literally, although to an extent that's going on. I mean it, metaphorically. So the US is on a crash regime, a crash diet, and a crash workout because the world is a closed loop. If the US moves in one direction, other people have to match that at the other end of the seesaw. If the US is going to have more industry, some people are going to have less. And so to others, it looks chaotic because it's shaking up their comfortable way of doing things. But for the US, it's seen as absolutely necessary and indeed existential.
Just to stay on the US, Michael, one of the biggest problems, at least from our part of the world that we see, is the extent of the US debt problem. I think it's somewhere nearly $40 trillion already, and there seems to be no sign of it slowing down. How does that all play out?
They have to stop buying from the rest of the world. It's as simple as that. And again, this speaks to how amazingly, and I'm not in any way talking about you here, but how amazingly naive or deliberately blind and ignorant the economics profession is, and the financial community too. Because on one hand, you will have countries saying, well, how dare the US buy less from us and place tariffs on us, et cetera, et cetera. And on the other hand, look at this US debt building up. Everyone who understands how international balance sheets work, and unfortunately that appears to be a very small subset of the markets, understands that when you run a large trade deficit, your debt goes up. So everyone's, well, look, I make my living selling to the US. Look at the stupid US going more and more into debt. I wish it wouldn't. So the US is now attempting to try and deal with its debt, but it's going to have to deal with that on the trade side. Actually, it should be dealing with it also on the capital account side and not letting money be invested in the US, which just goes into assets. Money going into the US, it should only be going into productive things like factories. And they're attempting to try and insist on that now. And ASEAN is also unhappy with that. But if you don't do that, you can't possibly resolve the US problems. It's as simple as that. So if we look at it just in a silo, like the US is wrong to be putting tariffs in place. The US is wrong to be telling us how we invest in the US. The US is wrong not to be buying from us. And the US is wrong to be having too much debt. They can't all be right. They can't.
So you also talk about how we are only seeing the early signs of this readjustment, this transformation going on. And what more can we expect down the line?
Well, as they say, you ain't seen nothing yet. Because we're merely putting in place the foundations of the new architecture. We understand now tariffs are here to stay one way or another at varying levels. So that's already a massive change. Tariffs are largely, give or take tweaks here or there, the highest since the 1930s. So we've gone back 100 years in time. And over time, everyone else will copy that. That's one huge change. The next one that's looming, which I already, dropped the microphone on very quickly, is the Federal Reserve. Trump will, over time, appoint new Fed governors, including the Fed chair, and the Fed will change. The Fed will have a very different role internationally and a very different role domestically. It will be not the same nominally independent institution that it was, that was always happy to see asset prices go up, but wasn't happy to see inflation go up. The Fed will be a much more political instrument aimed at maintaining US power and allocating capital to the right areas rather than the wrong areas, and those being politically chosen. That's absolutely logical. That's what every central bank in history was for originally, before we pretended that they were inflation targeting. So that's what it will go back to if grand strategy or grand macro strategy continues to run the way I think it will. Obviously, we'll see further changes to fiscal policy, and the bridge between the two, we'll see dollar stablecoins potentially changing the entire global financial system. So any one of those things we could talk for an hour about, and all of them will change the world dramatically, and all of them are likely to be seen in 2026.
So I'm trying to understand what you might be suggesting in terms of the Federal Reserve. If and when it becomes the animal that you say it's going to become, what will that mean for asset prices in particular? Which asset prices, and how quickly will that happen?
Well, look, it depends how it's done, because even under the umbrella that I just held up to describe it, there are different ways to get there. But to be abundantly clear, the Fed of old, which is stocks have to go up, houses can go up, et cetera, et cetera, et cetera, is not the same target, because you only have a limited amount of capital, even in the US, and you definitely have a limited amount of resources. So what should be a priority? You want to try and maintain as much of a market system as possible, because the US does prefer to do that. But should everyone really, if the Fed cuts interest rates, for example, be speculating on housing that's already too expensive, be speculating on junk assets and exotic derivatives, and or putting their money into a Silicon Valley firm, which creates an app that makes your pet cat look like a pet dog just for fun? Is that really a good way for the US to be spending its precious resources at a time when it feels it's under existential threat from China and Russia? I would put it to you, no. And I would put it to you, a Federal Reserve that understands the great game that the US is involved with won't just sit there and do that. So logically, I would imagine some shares will still go up and maybe others won't. I mean, the market will play that role, but the Fed may be not quite so willing to just sit there and watch bubbles be blown in the way they were all the time. Bond prices may do well initially because you are going to be pushing down interest rates. That certainly seems to be the message from the new Fed Governor Miran, for example, who Trump has appointed. But once they get there, do we really think inflation will be low immediately? Probably not, at which point you're seeing financial repression. So the bonds are delivering a negative return after the move higher in prices, interest rates go lower. Commodities, well, you're already seeing price floors being implemented to try and bring supply back to the US. But that has to go alongside expensive subsidies. And in the long run, what the US wants are cheap commodities inside the US and for their allies. But they also want expensive commodities for their opponents. And there are different ways to get there. And some of them are nasty and some of them are not so nasty, but none of them are going to be, enjoyed by the other side. The simple matter is the concept of where do I invest to get rich when the Fed does X, Y, Z is itself showing that you don't understand how the paradigm has changed. Perhaps the Fed doesn't want you to get rich. Perhaps the Fed doesn't care about you as an individual investor trying to get rich. Perhaps, and this is an extreme argument, I'm not saying we go all the way there, the Fed is purely concerned with the USA Inc. And anything you see on assets is a short-term measure to try and get a short-term result, which is exactly what we see in China, for example. The PBOC does not operate to try and push up asset prices to keep the middle class happy. They've been there at times. That's not their role. Their role is to amplify Chinese state power as much as possible. And of course, part of that involves keeping inflation down, as it would do in the US to a degree, and involves dealing with debt to a degree. But it's not just about what's good for me as an investor. And people have found that out the hard way in the past. And just potentially, although it's not a forecast, you may find elements of that are true in the US going forward.
Is it too simplistic, Michael, to say that, okay, if we play along with this strategy, all we need to do is buy US assets, whether it's a property or it's one of the big Mag 7 stocks or one of those things?
Yeah, it's a ridiculously simple way to look at it, which will guarantee to lose your money at some point. Because, for example, the Mag 7, this is clearly, to many people's eyes, a bubble. I'm not saying it is. I don't look at equities, right? But some people say it is. Some people say it isn't. You can make a valid argument that the US needs to have those companies doing well because it wants to try and get an AI boom going, because it wants to try and transition to new power sources, which they're partly driving. It wants to try and push productivity higher, which will mean that therefore debt can be paid down without a crisis. And also it wants AI for the military. So, you can argue it's genuine, You can argue it's a bubble. You can argue either way that you would expect to see those stocks going up. That doesn't tell you that the generic stock market is going to do well. Because I think ultimately part and parcel of economic statecraft would be the stock market doing well when the economy does well, not the stock market doing well regardless of whether the economy does well, which has very much been the model so far, which is, workers can be having a terrible time of it, consumers can be having a terrible time of it, but company profits can go through the roof. That is not a model with which you win the game of economic statecraft. We're already seeing that within the US political system, where people, are saying, well, you're not going to put me in the army. I'm not going to go and wave the flag and go and fight a war for you, potentially, if I can't afford to buy a house. So you have to look after, the common family, Joe Sixpack and Mrs. Joe Sixpack and 2.2 children, rather than just saying, hey, well, the Dow's up. That's the old world, not the emerging new one.
So one thing that distinguishes Trump from the previous administration is his focus on stablecoins and the whole blockchain digital economy. What is he trying to achieve here beyond, the simplistic argument that stablecoins preserve US dollar hegemony?
Well, that's already a really big argument because, a few months ago, there were a lot of very loud claims, which I was laughing at, saying that the dollar is done. The dollar is not done. The dollar is likely to finish the year, stronger than it is now. Maintaining that leading role is already important. But above and beyond that, there are so many related factors. For one, the way that the Genius Act has been written, when you issue a dollar stablecoin, it has to be backed by certain collateral. And at the moment, we can presume a lot of that will be short-term US debt, so treasury bills. Ergo, if people want to use stablecoins, they have to buy treasury bills. So you can generate extra demand for them. Great, you can finance your debt at the short end where it's going to be cheaper. That's already a huge advantage. You might pay for 2 years' budget for the Pentagon doing that. That's nothing to sniff at. Secondly, of course, if you can get people to expand stablecoin demand even wider, you suck in capital from the rest of the world. Miran's already argued that will push down US interest rates even further, and it will push up interest rates in other countries. So capital can flood out of Malaysia, for example. It can flood out of Thailand, it can flood out of Singapore, it can flood out of China, et cetera, et cetera. Now, I'm not saying that's the deliberate target, but it could be if they wanted to. Then, of course, at the same time, it becomes a mutually reinforcing mechanism, because you can turn around and say to people, right, well, we're going to insist that you want stable coins. We're going to say if you export to the US, we're only going to pay you in them. So next time you send your shipment of goods, you're paid in stable coins. So that creates a demand for the treasury bill at the same time behind it, but it also forces you to now take payment in an electronic currency, which has not got any debt behind it. So you've already got a dollar which is backed by a T-bill in existence. That's a fiat dollar. Now you're going to be paid in a crypto dollar, the stable coin, which actually doesn't have anything new behind it. There's no debt issuance there. You've got 2 for 1. So the US effectively gets 2 for 1 out of that. There are many, many other areas in which this can be used and utilized, beyond the fact that, of course, they're programmable as well. Instead of being in a world in which everyone thinks they can do whatever they want with the dollar, and then if they're naughty, they get put in a cage with sanctions, everyone's now in a safari park. You can do whatever you want, but you're within the US safari park. And if you go past a certain border, you can't. There's a fence there. I can't stress enough what a powerful tool of US policy this will be were this to happen. And again, far too many people are just asking, so should I buy them? How much money do I make with them? And I say, that's not what it's about.
Okay, so the logic behind stablecoins seems to be quite understandable. But what is less than understandable is the Trump administration's focus on Bitcoin. Now, there's still a lot of skeptics in this world about Bitcoin. There's even a strategic Bitcoin reserve bill being mooted by one of their lawmakers. I think something Loomis, right? Caroline Loomis or something. What's the thinking behind that?
Well, first of all, we have to wait and see. But the considered opinion is that the US will attempt to try and use stablecoins only with its allies. That's the first thing to understand, because you're effectively doing buy one, get one free, and your enemies won't want to do it, or your opponents won't want to do it. The people who have already agreed to be under your defense umbrella, who have agreed to take their capital and invest it in factories in the US and in mines and in productive assets rather than into US debt, which is already being agreed. Malaysia was another one of the countries signing up for that. Parallel to that is, okay, we agree to use stablecoins, which gives the US extra fiscal headroom to invest even more to fund the Pentagon, et cetera, et cetera. But that won't extend to everybody. So to the others, the US is also potentially going to try and move away from using the dollar directly, because remember, when you run a trade deficit, as I said, you build up debt, which is deindustrializing, et cetera. So the US may try and move to a different payment system, which we call a neutral reserve asset. similar to gold. That could work in the same way. But rather than gold, they may want to use Bitcoin because they believe their AI will help them mine it faster than other people. And they also believe they hold around a third of the stock. And we've seen one or two significant seizures of Bitcoin holdings in the past couple of weeks in Asia too, showing that the US can snoop down and suddenly snuffle them up like a pig with a truffle. And if that happens, okay, so who would someone like China, sorry, what would China use to trade with the US? Potentially Bitcoin. So then China, okay, is paid in Bitcoin, fine. The US can mine them, but there's no debt built up with that. The US completely changes its fiscal trajectory as a result.
But when you talk about mining the rest of Bitcoin, I think there's only like about 1 or 2 million Bitcoins left. So there's not a lot left in terms of yet to be mined supply, and most of it is already distributed. So I don't see how that can be a
Well, maybe it doesn't have a lot of road in front of it. I mean, 1 or 2 million, depending on the price, would be worth quite a lot if if you look at the current market price, even given how it's dipped recently. But above and beyond that, from the US broader perspective, as I said, if you want to maintain the US hegemonic power and you want to have dollar pricing, you are going to be doing that within a dollar stablecoin universe. But for the countries who are going to say we are not going to use the dollar stablecoin, you need to offer them something else because you're not going to be able to decouple from them immediately. That'll take a while to get there. And in the interim, you have to have something to trade in. You're not going to do it in gold. Well, and the US could, but I think that's much, much less likely. So from their perspective, keep it digital, keep it crypto and keep it Bitcoin. I'm not saying that there's a complete granularity in terms of the understanding, even on the US side, of exactly how all this will play out. Because it's one thing to have a grand strategy. It's another thing to have a micro strategy where you can actually talk your way through every step. If then what? If then what? If then what? But the thrust of the US argument and the US logic is still very, very clear. And one part of it is, yes, we don't just want to continue trading with the US dollar where we run large trade deficits.
So it seems to me that there's going to be quite a lot of fallout from the non-US part of the world. I mean, as you say, if they do pursue that strategy, there could be a lot of capital drained out from Malaysia and other emerging markets. And so you talk about how this grand macro strategy for the US has a lot of moving parts. And if it doesn't work out in the way that America wants it to work out, it might devolve into a situation where there could be military statecraft. And you did not suggest that there's going to be a war coming, but you did suggest that it could take a different, perhaps a less, neutral format. What did you mean by that?
Well, again, let me just issue a very simple taxonomy here. Classically, there are only three forms of statecraft: political, which is obvious; economic, which I've just been describing, although that can move right the way to the cusp of economic warfare, depending on how aggressive you want to be; and military. Those are your tools. There's nothing else really, conceptually, you can use. So the US has tried political and is trying political. It's strong arming people. It's using economic statecraft very aggressively as a supplement to political statecraft. And if it can't get what it wants with economic statecraft because people resist or it doesn't work, they are not going to surrender their leading global position and say, oh, okay, well, we had a good run for 100 years, but we're done. Someone else can run the world. We'll be much smaller, much less powerful. We have the second largest arsenal of nuclear weapons in the world and a massive fleet of aircraft carriers, but we're just going to basically retire and be smaller and poorer now. That's incredibly unlikely. They will revert to military statecraft. Now, that doesn't mean they invade a big country because that's the fastest way to destroy yourself. That's one of the reasons why the US is weaker now than it was. But you still have the ability to squeeze or threaten or undermine other countries who are key providers of upstream inputs into the economies of your opponents. So what am I talking about? I'm talking about China, clearly, which needs a massive amount of commodities from around the world. And I'm talking about places like Latin America and Africa in particular, which provide a lot of commodities to China. And China, for the next 5 years at least, will not be able to project military force to Africa or to Latin America. 10 years from now, perhaps they could be in that position. Perhaps. Not today. So the US is. So if the US cannot achieve what it's achieving with the measures it's using so far, I'm not forecasting it, although we're starting to see elements of it already when you look at Nord Stream being blown up, when you look at oil refineries in the EU being blown up, when you look at mysterious explosions in mines in Guinea, for example. It's logical to say that there is a risk that the US will act against supply chains in other areas to send the same message to China that China did to the US with rare earths. And for example, why do you think you have aircraft carriers, or the world's largest aircraft carrier, off the coast of Venezuela today? They're not sightseeing.
Do you see J.D. Vance as the potential, as a worthy successor to Donald Trump, given that he's in his, final term now and he's got I mean, he's in a rush. He's got 3 years left. He's clearly in a rush. But beyond that, do the Republicans stay the course? And does America like what he's doing?
Well, that's a very, very specifically American politics focused question. And obviously, the Republican Party had a bad election result a few weeks ago. There have been another few smaller election issues that are more mixed. But generally speaking, yes, they got a bloody nose relatively recently in the special elections. And clearly, there are emerging splits within the MAGA coalition on the far right of it, with a more libertarian wing and a more nationalist wing. Eclipsing even what people think MAGA involves in that particular sphere. So there's no guarantee of where these things go, but very clearly that the White House focus will be absolutely on the midterms over the next 12 months or 11 months, doing everything they can to move the needle to try and make sure that they win those, or at least hold the House. And if they hold the House, and the Senate one would presume, then they can carry on, and we'll see how radical they can get into the final leg of Trump's term, and then we'll see who emerges. I mean, I would think Vance is the front runner, but certainly there are other credible candidates. Trump, likes to have a field of competing apprentices, as we know. He's definitely got a form for saying you're fired. We'll find out more over the next couple of years.
So a couple of months ago, Michael, when you're in Malaysia addressing the Malaysian crowd, you actually spent quite a lot of time in that session talking about U.S.-China ties. And we know that there's been a kind of like a détente that's been inked for 1 year recently. How do you read into that 1 year kind of like peace trade truce? And how would you interpret what comes next beyond that?
Well, I think the most charitable explanation you can give is either like the World War I Christmas game of football between Germany and the British troops, which of course lasted for 1 day, or a pause to refresh, a ceasefire to rearm. Because immediately that it went into place, there were question marks over what was actually agreed, whether it has or hasn't been fully, signed, sealed, and delivered on every single front. The US still isn't getting all the rare earths that it was promised. China still isn't buying the soybeans. But fundamentally, the US has doubled and tripled down on trying to get rare earths from other people. If you believe China is going to give you all the rare earths you want going forward, and there's no geopolitical issue having them as your key supplier, why on earth would you then do everything you can to go around the world getting everyone, including Malaysia, to give them to you? It's abundantly clear that the US wants to decouple on that front. And as soon as it has, it's in a stronger position vis-a-vis China. And China, in the meantime, is doing everything it can to try and develop all the technologies that the US currently has that it doesn't. So it doesn't have anything that the US can threaten it with. Which, by the way, brings us back to my original point from a moment ago, which is that China can't decouple from commodities. It can't. There are key commodities it will continue to need, and they are not in China. And many of them are in Africa or Latin America. And therein lies the rub, because the US will continue to have that in the longer term until China has military projection power much further afield to be able to say, well, there can be a mysterious explosion there, or a ship can mysteriously sink, or there can be a blockade, or we can change government in that particular country, et cetera, et cetera, et cetera. So that's where I think a lot of the game is going to be played out.
So then, which brings us to the most important question of all. If you are advising corporations and in fact individuals, how would you advise them to position themselves, both from a business standpoint as well as from a personal kind of like financial allocation standpoint?
Well, from a general perspective, I always tell people to sit fairly near the fire exit. I particularly at places that have got bad reputations for fire safety. And in my own personal case, sometimes I go to countries that I know are not careful, and I actually go and check the fire exit when I check in to make sure it's not blocked by furniture or padlocked or stuff. And those kind of things do happen occasionally.
In practical terms, what does that mean? Hold cash?
No, I mean,
Take
no,
up
holding
bullion?
cash is running out the door, right? That's actually running out the fire exit. But in all seriousness, look at your positioning, look at what your assumptions are, and look at what your potential hedges can be. And those hedges can be financial, they can be supply chain based, they can be political, but always consider whether there is or isn't a game being played above your pay grade, which could disrupt what you want to do. You might have a wonderful supply chain and financing network, for commodity X into your factories to produce good Y, which you sell to country Z. What happens if the government changes? What happens if the US and China have a split over that? What happens if that commodity suddenly gets dragged into some kind of conflict and gets the price pushed much lower by somebody or much higher by somebody? How well could you wear any of that kind of volatility? And if the answer is I don't think about it because I'm just happy doing my job or happy with this particular portfolio, good luck to you, sir or madam. But you can't expect that life will continue to always be so kind or so generous to you. Just consider the alternatives. So that's my simple message. And there are lots of different ways to express that, depending on the individual or the firm involved.
Michael, that was fantastic. Obviously, there's a lot more to talk about, but together, you're a very, very busy man. I'm hoping we can do this more frequently down the line. But in the meantime, thank you for your time. Thank you for your thoughts. And good luck with the read of the world going forward.
Thank you. Bye bye.